All right. Hi, good afternoon, everyone. This is Elkie here with you guys today. So, today we're having our weekly market outlook section, market update section. Okay. So, it's 26 September today and Monday. Okay. So, if we look at our FBM KLCI today, we can see that our FBM KLCI is down 5.3 points at 1419.68. Okay, so although we are seeing 5.3 points, it's not really that much. Okay, we are only up down 0.37%. But if we look into our gainers and decliners, we can see that it's really skewed to the one side, where we have 689 counters down, while we only have 146 gainers for today. Okay, for the first half of this week, Monday. Okay, so remember when I by early this month, we have been saying that September is usually historically a weaker month. Okay, so and this month we have our MPC, our OPL rate decision, we have our FOMC Fed's rate announcement happening last week, and all are more bearish towards the market. So what we are seeing is the continuing impact towards our market for today. Okay, yeah. So if we compare to region indexes, and also what happened in the US market last Friday, we are seeing that our market actually quite supported at this time. Okay, because for last week, okay, for last Saturday or last Friday, we can see that the Dow Jones all has been selling down, especially Nasdaq is dropped more than 1%. Okay, and at this point we can see Dow futures continue to pressure lower. Okay, and we can see most of the regional indexes they are going in negative. Okay, so it seems like very bearish at this moment. But if we look into our charting, okay, if we look into our FBM KLCI, okay, we can see that our FBM KLCI is actually coming into near to the support levels at 14th, around 1410 levels. Okay, 1410. So today the lowest that we had is 1416. So we can see, despite that there was some selling happening over the US market and the region markets, we are seeing the selling actually seems to a bit slower. Okay, especially we had quite a strong, massive selling happening last week on 21st, 22nd, or even 23rd on Thursday. Okay, after the US indexes slump on the Fed's interest rate decision. And on the technical side, we can see very clearly that this is a hourly double top, and the breakdown at the 1468, 1465 to 68 levels, where we can see the gap down and also another rejection, retest the resistance and further selling down. Okay, so what we're gonna expect right over here is 1410 is the critical support level that everyone will be eyeing. Okay, so we might see some support coming in. It's not asking you to buy right now, but we might see the selling to slow down, and there might be some rebound happening. So will it happen this week? Yes, it might. This week is the last week of September, last week of the month of September, or it might go sideways, trading near sideways at this level before the rebound. Okay, or even we might see the break of 1410, try to test the 1400s, then only we have the rebound. So there are a few potential scenario happening at this level. But what we are seeing is the selling pressure could be slowing down right over here, starts happening. Okay, so if that happen, what are the sector or what are the stocks that we should look into? Okay, definitely if we are doing short-term trading, okay, if we are doing short-term trading, we really need to look into some fast reactive counters, okay, sectors. Okay, definitely one that has been trading very actively with the markets will be the technology. Okay, if there's any good news happening, especially when we are seeing on the rebound on the FBM KLCI, okay, in near terms, on the July 14, we can see technology sector, they rebounded very drastically, very fast. Okay, happening with that. And also because technology sectors has been selling down since November last year. Okay, the sellers in this sector has been kind of, they got out, and everyone has been thinking the technology stocks has been more towards at the lower base. Okay, so if there's any rebound over here happening, we might see there could be more buyers coming in on the technology side. Let it be for some midterm swing trading or for short-term trading. Okay, for short-term trading, short-term rebounds. All right, especially we are seeing the sign of more supports coming in on technology. On this time around, when FBM KLC has been selling down that drastically, we are not seeing that much selling on technology sector. So tech stocks is more supported over more supported at our Malaysia side at this point. Okay, but of course we have to know that this is a technical rebound that we are talking about. Okay, and in a longer term wise, there might be further selling. Okay, on the tech side as well, because it will very closely relate with the economic cycle, where when the economy is more towards contraction and also slowing down kind of movement. Okay, technology which is more focused on the growth and high risk segment, the interest would not be as aggressive as what we are seeing for the past 4 to 5 years ago. Okay, all right. So if you are really looking for technology to trade, yes, you may, but for more towards longer term investment wise, I would say that you really want to size it cautiously. Okay, and want to keep some bullets for cheaper bargain hunting in future. Okay, yeah, but if we see any reversal in the sentiment, short-term trading, yes, this would be the sector that will be most reactive at this point. Okay, yeah. Other than that, if we really want to position in for either day trading or more towards short to mid-term kind of trading, the two sectors that we really want to still focus, it will be more towards financial services and also consumer products. Okay, yeah, especially consumer products, because consumer staples is the defensive sectors that we are looking at, regardless that the although inflation is happening, we might see sales and profit margin of some of the consumer products might drop. Okay, due to the higher raw material price, all this thing. But for those that consumer products that everyone have to use, they still have to use it. Okay, yeah, they can cut at everywhere else, but the cut that can happen on the consumer staples will be least compared to the rest. Okay, so consumer is the sector that we will still focusing on this year. Okay, so if we look at some of the consumer counters, some of the popular one, like one of them is on Kawan, we can see Kawan's still on a very strong uptrend. Okay, above the 20 days moving average. Every time the selling back is a time to for it to rebound. Okay, yeah. So for Kawan, we can see that it has topped and trade above the resistance level at this point at 2 ringgit 20 cents area. Okay, so the surge has been quite strongly happening, so it might have to take some breaks, some profit taking, and also digest the gain over here before we can see another break to go higher towards the next resistance around 2 ringgit 60 cents area. Okay, yep. So another one that's the popular one will be Power Roots. Okay, okay, we can see Power Roots has been trending from early this year from 1 ringgit 27 cents to 2 ringgit 17 cents. So you can see, despite that, everyone has been saying that this market has been bad. It really wasn't be friendly to most of us, but we need to know that we need to go into the right sector following the what's happening in the economy, where is the appetite of the markets. Okay, so we can see Power Root wise, after the bottoming rebound from 1 ringgit 33 34 cents, it has topped at 2 ringgit 14 15 cents, which is at this resistance level. Okay, this resistance level, and then the pullback. Okay, Yeah. So similarly, what we need to look at it is, if the market continue to pressure lower, we might able to accumulate some at 1 ringgit 80 cents levels. Okay, this could be the support for power routes. Okay, at 1 ringgit 80 cents level. So for the rebound, we might see if the market sentiment returns go back into a more favorable, then we might see the rebound back to 1 ringgit 10, 2 ringgit to 2 ringgit 10 cents area. Okay. So Padini wise, the rebound in Padini is smaller compared to the rest of two, because we can see Padini actually quite supported after the rally since 2020, end of 2020, and this year it actually also still in positive gains. Okay, but what we are seeing on positive Padini is the strong resistance at 3 ringgit 50 cents to 3 ringgit 80 cents area, and it might pressure lower to the support of 2 ringgit 95 to 3 ringgit. Okay, so when the market sentiment is more skewed towards bearish, what we want to do is we don't want to be too aggressive or wanting to just go in and buy at any time. We really want to look into some of the potential sectors. What are the sectors that is in the trend? What are the counters, and also where is the support, so that we can get at a better price. We are building the edge for our positions, and also try to write on what's happening in the market. There's still a lot of opportunities in this market, but we really need to take our time and do it. Okay, this is a time where the market could be slower. Okay, the opportunities might come slower compared to those compared to 2 years back. Okay, so we really need to be patient and trade on some of these counters that come along with the trend. Okay, all right. So these are some of the consumer sectors. If you want to know more, there are a bit more like Bonia, all this some of the trading one. Okay, that you can look into, and also and also look into some of their support levels and find if they gonna show some sign of support at the support zone. Okay, for us to try it out, position in for a low risk high reward kind of positions. Okay, it's really depends on how we position ourselves. Okay, so if we talk about financial services, why we talk about financial services, one of the reason is because with the increased interest rate, we are seeing the net profit margin for banks. It would be better. Okay, it would be better, but of course the potential increase of the non-performing loan and also the lower loan applied rates, it might drag the performance as well. Okay, so if we look into some of the bank sites, okay, we can see Maybank after the after the dividends, it has adjusted lower. Okay, the price has adjusted lower at rebounded. Okay, so at this point we are still seeing Maybank to be very well supported 8 ringgit 50 to 8 ringgit 55 cents area. Okay, so anytime when it comes to these levels and show support rebounding, it could be a short-term rebound signals for you to try to trade on it. Okay, with a potential, it might cover the gap. Okay, at 8 ringgit 80 cents level. So that would give us a good buffer of around 3% over there. Okay, a potential 3% kind of reward compared to the break of 85 cents, which is less than a percent. Okay, so if we want to look into something a bit more trading wise, we can see CMB is one that we can look into, which actively in trading. Okay, so the next NPC, NPC will be in November. Okay, so from there on until right now, we might see some retracement in the bank stocks, which for the CMB, the pullback, it might come to 5 ringgit 26 or even 5 ringgit 18 19 cents level. Okay, which we see this is the multiple support happening right over here. Okay, at this level, just come in line with the 50% 50% FIB retracement level or another one will be somewhere around. If the market really not that performing, then we might see a strong selling to 5 ringgit levels for CAIMB. Okay, yeah. So if we are talking about those that really benefit from the net profit margin, we can see since the mention about increasing the interest rate, IPMB has been really performing. Okay, and it has formed the double top right over here. We can see the double top at 380 cents. Today, this is the second rejection. So very good chance that ABNB might retrace further towards the midpoint support around 3 ringgit 20 cents, 18 to 20 cents. So for ABNB, okay, the downside is about 9.7 cents something. Okay, why is it so? Why is it so? Is because this might come amidst that the realization of profits after their bias has been positioning earlier for on anticipation of the rate hike. So when it's ready, the impact of the rate hike has slowed down. Okay, and also the market sentiment turns sour, and profit taking might come in faster than usual. Okay, so for ABNB wise, we might see the profit taking to be more drastic happening. Okay, and hence lead to a slowing selling down towards the main support of 3 20 cents. Okay, especially if the sentiment of the markets continue to worsen. Okay, but definitely we know that when it comes to this level, uh it will be around 50% drop from the high, and also with the fundamentals remain intact with the increase of the net profit margin, then this is a good level for us to look into for a potential technical rebound from the area, and that would give us a high probability winning strategy. Okay, so at this point for this week, it doesn't mean that when the market starts selling down, we have to really go in and buy, shopping, all this thing. Okay, yes, you can, but you might really want to do it small. Okay, and also if you really want to position in for some high probability winning strategy wise, then we might really want to wait for it. Okay, yeah, since although FBM KLSAT is coming near to the support, but if we look into the small cap, okay, there are still some space for the small cap to come down. Okay, yeah, so for the FPMKR small cap, it might continue to drive the sentiment to stay weak for maybe another week or two. Okay, so at this point, what you might want to do is you might want to reduce some of your holdings of the small cap and put the money into FBM KLSA to blue chips counters, which we have already seen the selling happening and coming into the support and the slowing down in the momentum. Okay, so the portfolio switching is advisable at this time. Okay, reduce some of your holding on small cap and put it into blue chips, or keep it as a cash, so that you can do some of the bargain hunting when we see the buying or the rebound happening at the support zone on the consumer and also the financial services sector at this area, at some of the stocks that we mentioned just now. Okay, yeah. So other than that, I think everyone's many focus will be stick on the budget 2023. Okay, it's election budget. Okay, it's an election budget. So with the anticipation with the election budget, although we are seeing the market is not really that performing. Okay, will the budget save the markets? Personally, I would say that the chances are not really that high. Okay, uh, it but we might see more some of the incentive and some of the helps. Okay, raise out towards the sustainability um of the livings at in under current economy environment. Okay, hence it just come in line with what we are talking about. The focus will still remain at the consumer, because if the money is trying to trying to help the B40 or the B40 to get through their livings, okay, the incentive is going there still, then we are very good to see that the money flow will still go back to the consumer side, rather than some other sector like constructions, mega projects on this budget. Okay, and also it's an election budget, so we should see some of the good incentive to be given out at on this budget. Okay, yeah. So for some how about after the budgets, with the election, with the elections coming, will the constructions move ahead? Um, we are conservative about that. We are conservative about that. One of the reasons is because the economic environment is not encouraging at this moment, and with the financing costs going higher, and also the inflation's happening. So for construction, it's not an easy environment for them to excel and also strike out from among all other businesses. Okay, yeah. So um unless we are seeing governments gonna really start to giving up some of the mega projects more actively, then we might see the interest go into construction. Otherwise, this year, for the rest of the year, the team is likely to stick with the for the consumer sides. Okay, yeah, for the more defensive. Okay, so other than that, healthcare is one that we might want to look into for uh for defensive sector. Okay, we can see that the healthcare index has been driving down from the high. Okay, from right over here and all the way down to what we are seeing here is more than 65%. Okay, and we also know mainly it's because of the selling in the glove. Okay, so whether should we buy into glove counters for the defensive? Okay, for the defensive, that's the questions that we really want to ask ourselves carefully, because glove ASP is still under stress. Okay, uh, the ASP is still on the selling side, declining mood, but it basically has really much near to the bottom. Just that the demand is not picking up at this moment, as the many of them, they still have a lot of stocks, so the demand is not catching up. Okay, so for glove counters, why we might see some sideways movement rather than a strong rebound in the glove sectors, because of the this kind of current economic environment or the selling in the markets. Okay, so for glove like Top Glove, like Hatalega, okay, after recent selling, we can see Hatalega already start to go into more to a sideways kind of movement, instead of expecting a reversal rebound, which the chances are low. Okay, it might continue to stay to go into a sideways mode. Okay, whether it will go into sideways mode and another plunge, that is something that we are not able to predict. Okay, but at this point, we can see Hata is holding very well at 1.50 at level. So we might see a range trading for Hata Lega. It might be somewhere around 45 cents towards 80 cents area, or if for a lower range, it will be 70 cents. Okay, and that also can give us a good near to 10% profits. Okay, if we base on today price, that is still a 9%. Okay, so um for defensive sector wise, Hataliga is likely to um on the glove side, they are likely to go into sideways. So if you want to do some ranging modes, ranging trading, yes, you can consider, but try to keep the size more, yeah, so that you won't be caught into something like this on the massive selling, okay, after the result. um but until the next result is in November, so it's likely to go sideways in this period of time. Okay. Yeah. So if you really want to trade sideways ranging, then you can consider to buy at 1 ringgit 50 cents, and if rebound to above 1 ringgit 65 cents, then you might really want to sell it, and that's still quite some good money over there, despite that the market sentiment is weak. Okay. Yeah. Uh, so other than that, we are seeing that the budget mentioned about they're gonna widen the broad-based taxation, which is actually um it wouldn't be too positive for businesses. Okay, so at this point, under the current selling sentiment, I don't think any other sector will be very good to look into except for defensive one like healthcare, and also the consumer staples, and also financial services because of the rate hike environment. Okay, so stay cautious, stay picky at this moment. Okay, stay picky at this moment, and if you continue to trade very actively, maybe you want to keep your size smaller. Okay, and also focus on some of this sector that could be performing better when the sentiment recovers. Okay. Yep. Yeah. All right. So let me check out some of the comments over here. Okay. Okay, Mike is mentioned about Yinsen. Okay. Yeah, we didn't talk about too much about oil and gas. Okay. We didn't talk about too much on the oil and gas. If we why is it so? It's because we can see if we look into the Brent crude oil, okay, the oil price chart, we can see remember previously I have been mentioning that I was marking in by the end of August. I was marking that the oil has been forming a top right over here. We are seeing another high forming. It's a double top at 1 ringgit 23 dollars. Top rejection. Okay, and although we are seeing the break of the support, but with a declining wages, we are seeing the rebound happening after that. Okay, when we were drawing this, it happened after that, but the rebound unsustainable and drop lower. So with the Friday selling and breaking below the 88 bucks, okay, we are seeing there are more further selling towards the next level, $70 for UK oil, okay, for the brand. Okay, so with the oil price is setting to go lower technically, mainly due to the demand worries as the economy is slowing down. Okay, the oil and gas counters are unlikely to perform because the allocations and also the allocations for oil and gas, let it be drilling or exploration, all these things will come down. Okay, and also following the sentiment, we will see oil and gas counter not to perform. Okay, so for Yinsen wise, we can see Yinsen has retested the top at 2 ringgit 33 cents and sell down further to break the tail low at 2 ringgit 20 cents. So with this, we might see Yinsen to trade back into the support of 2 ringgit levels. Okay, trying to find the support at 2 ringgit levels, then only maybe we might see the rebound. Okay, yeah. So for oil and gas stocks, wide is likely to be weak. Okay, similarly, we can see hibiscus also has been selling down already. Okay, coming near to support of 80 cents, and if the 80 cents break, we might see the next support will be at 72 cents for hibiscus. Okay, yeah. So other than that, if we look into okay, just now we mentioned about FBM KLCI supports. So the immediate support is at 1410. Okay, so what if the 1410 support they just cut it through 1410 support? Next support level for FBM KLCI, I would say, is somewhere around 1368 to 1375. Okay, 1375 to 1300 1355 to 1370 area. Okay, this will be the next support for the FVM Let's hope it can hold well at 1400 levels and then start rebounding from there. Yeah. Okay, but if really the 1410 not able to hold break below 1400, then we know that it has quite some space to drop to 1355 to 1375 area for FPM KLCI. Okay, yeah, and yeah, Alex, I understand where you're coming from. We are seeing the ringgit has been weakening. Okay, and those export counters that are getting their profits in USD, they would be benefited because the ringgit is so weak. Once they receive their payment in USD, in dollars, or in other currencies, when they convert back to the ringgit, they might benefit from the uh, foreign exchange. Okay, for the currency. Okay, but one thing that we really have to check is whether the growth of the businesses, whether they are getting the same order that they are getting for 1 year ago, okay, or the orders has shrink, okay, whether their order book still remains strong or not. If the order book remains strong, they are still getting so many sales, all this thing, then yes, they are definitely gonna benefiting from the weakening ringgit. Okay, but of course, if they are not seeing the growth in their revenue, okay, they are not maintaining their sales, then the depreciation in the ringgits, it wouldn't helping them too much lah. Okay, but on the weakening ringgit side, one thing that we need to be cautious and careful is if you are holding those companies that having a huge huge debt or financing cost in US dollar, okay, denominated in USD, then they might face a higher interest of higher financing costs, and that would be further dampen their earnings. Okay, at this point. Okay, so that is something that we need to be aware of. All right. Okay. So Engine Ointment is talking about EIB. Okay, EIB is the plantation counters. Okay, plantation counters that newly listed in July. Okay, so unfortunately for the sector info, it doesn't have it. Still not updated because it's a new counter. But we can see that for EIB wise, we are seeing the 29.30 is the immediate support levels for EIB. Okay, so if it pull back and hold above 30 cents, start rebounding, then for short-term trading, yes, this is one way that you can trade it. Okay, and if we look into EIB, if we are talking about short-term trading, we really want to also check the counters. The share issue is only 300 million. So for EcoScience International Berhad, the movement, if the buying interest incurred, then the movement could be quite fast. So for short-term trading, is quite workable. Okay, and if we look into FPO prices, one thing about EIB that's not really that favorable at this time is because FCPO has broken lower below 3500 levels. Okay, further selling today. Okay, so the downtrend continues. Okay, but one thing that we need to bear in mind is with all these flood warnings happening, and also the Russia-Ukraine tension continue to escalating. Okay, so if these two we are seeing a prolonged effect on these two impact, that then we might see the events might drive the demands, and also the demands, the supply disruptions, and also the demand for all these products going higher. Okay, so from there we might see the sunflower oil continue to have some, at this moment it isn't. Okay, there is no any supply disruption because Russia has allowed Ukraine to export it. But if the tension continue to escalate, then that could happen, and that could help the CPO price. And also if we are seeing flooding and also La Nina effect uh, crashing on the productions in Malaysia and also Indonesia, then we might see the rebound in the crude palm oil price. And if these two happen at the same time, then we might see the plantation sectors to rebound. And of course, your EIB will be benefited. Yeah, Encik Noiman. All right. Okay, so Charlie is asking about CFM. Okay, CFM has making quite a strong move for the past 2 days. Okay, including today's. Okay, one of the thing that I think has been circulating the markets about EIB is on their they are having a signing ceremony between CFM Berhad and Energy Absolute Thailand, okay, in KL today. All right, until 12 p.m. So, the movement could be coming ahead of the signing on the speculation period. So normally, what we are seeing is buying on rumors and sell on facts. So with the signing happening today, afterwards we might see some profit taking coming in, and the immediate support it would come in somewhere around at 1 ringgit 20 cents level. Okay, yeah. So other than that, last we're gonna cover some of the view on those IPO stocks. Okay, for the past two months, we have been seeing very actively trading in some of these IPO stocks like LGMS. Okay, so what we are seeing on LGMS is right now one thing that we need to be aware is it is forming a potential a lower high, and it it's not going to be a lower high until it breaks below 1 ringgit 12 cents. So please do be aware if the price selling below 1 ringgit 12 cents for LGMS, we might see a more selling pressure to coming in and try to test the 1 ringgit levels support. Okay, yeah, and if that happen, it might lead to the selling in others IPO stocks as well, like SFP Tank. For SFP technology, it still looks very well, very nice, where it might continue to form a flag formation and break out further. Okay, and of course the other point should come if we are seeing the selling back to 1 ringgit 50 cents. Okay, if that happen, it will become a very strong reversal signal for SFP technology. Okay, and of course, if you're putting your trailing stop, you might put it nearer at 20-second low at 1 ringgit 66 cents. Or if you really want to have a confirm reversal signal, then you want to put it at 1 ringgit below 1 ringgit 50 cents. Okay, and for Synergens wise, okay, for Synergens, what we are seeing is also still going on uptrends in the consolidation at this level. At this point, we are still seeing higher low happening. Okay, testing the resistance of 1 ringgit 06. So if we are seeing the breakout of 1 ringgit 06, it might trigger another rally. Okay, but of course, if the sentiment is recovering at that point with the FEM KLCI, all this has been rebounding, then we might see the rally to prolong and make another new move on Synergens. Okay, yeah. And as for FFB, okay, Farm Fresh, okay, we can see Farm Fresh has today has tested the IPO low of 1 ringgit 50 cents level. Okay, yeah. So for Farm Fresh Berhad is not easy to trade, as we can see. Farm Fresh always have all these long tails happening. Okay, it's not easy to trade Farm Fresh for short term because the move could be quite drastic. Okay, but what we are seeing right now for Farm Fresh, it is since it has broken below 1 ringgit 65 cents level, it might trade in this sideways ranging mode for a while for Farm Fresh. Okay. Yep. Okay. So, you do really want to look at LGMS, SFP tags, Synergens, all these things for the queue of how's the sentiment on all these IPO trading stocks, recently, and of course not to forget another one will be ECMO that many also have been actively trading. Okay. So for ECMO, it's the same, forming a potential lower low lower high, and if we break below 85 cents, then that will be another lower low happening. Okay, so hopefully it will support at the supported at the 85 cents support and start rebounding for all these IPO trading stocks. Then you guys will have some trading opportunities right over there. Okay, yeah. So that will be all for our section for today. And if you have any other questions, okay, do feel free to drop into the comment, or join us on our next weekly update sections on next Monday. All right, okay, so thank you very much everyone, and have a good week ahead. Bye bye.